Hi guys, how are you? It's me and Aditya back today.
Hello guys.
Aditya,
Hi. How are you?
all good. Yeah.
So,
So we are creating this video today to show you on how we are doing your portfolio review at Rupeeting. So basically, let's start. I will guide you on how we review for stocks, and then Aditya will guide you on how we do portfolio review for mutual funds. So let's start. So I'll explain you on how our process goes. So firstly, we'll take you on our website. You'll have to come on our website. So I'll just share my screen here.
meanwhile, I guess we get many queries regarding this कि review तो आ जाता है, but what you guys exactly do. So, yeah, this is the full-fledged video कि how our workflow works with regards to the portfolio review and what exactly when we tell you that these are the red flags in your portfolio or these things could be done right way. So this is all what it takes to build that particular thing.
Correct. That's true.
Yeah.
Yeah. So whenever you guys want to send us a review, just go onto our website. Then you will find this button. Click on that. You have to scroll down a bit. So the form is still loading. Yeah. So you'll have to fill your details here. So we get this details on the backend. I won't show you to help prevent privacy issues. Okay. And once this is done, whenever we get your portfolio, we upload it on our Morningstar platform. Okay, so we have an advisory station where we generate a report for any client. So here we have a good list of clients. Once we add your data here, then we get redirected to some area like this where we have to add the stocks that you hold. Then we allocate shares on how many quantities you're holding. That's why we usually ask people that we need to know the quantity that we need, that you have currently in your portfolio. Then we do some settings for benchmark and other settings. And then we generate your report. Okay, so now let's dive deep into on what we look into your reports, especially. So firstly, whenever we download a report, first thing that we usually see is how much quantity of stocks you're holding. That's the main mistake that many people do. Isn't it, Aditya? Haven't you seen the same?
Yeah, that's absolutely correct, and I've seen with the many portfolios that people just keep on buying the stocks and they don't put that attention to what is happening at the portfolio level.
Yeah, true. Even if you see in this portfolio, this client is holding currently 46 holdings.
Correct.
I mean, there may be good stocks in there. There are HDFC Bank, there's Polycab. These are good stocks. Apollo Hospital, another good stock, but still, if you see the allocation, it's very less here. So Apollo Hospital is holding around 3%. Okay. So what people do currently, people don't realize they just go through YouTube videos of their own analysis. They keep on buying on stocks. And I don't know how. So major mistakes they do is by allocating weights to the stocks, however they add this. So we will just like to inform you that anything about 20 stocks does not give any added benefit to a retail investors if they are holding it. Okay,
Right.
so
In fact,
one,
diversification turns out to be over diversification and it ultimately hampers on the return.
yeah, true. Because see, they don't get any benefit from adding additional stock. Apart from this, there's another issue that arises is that since retail investors do have their daily job also, they cannot
Right.
track anything more than 20 stocks in their list. Okay,
Absolutely.
so it's very hard for them since it's our job. So we to track every day all stocks that are there in the universe. But for retail investors, it's very hard. So may it be quarterly results, maybe some significant news they get to know at the end only when the markets have shown
The
effects.
correction and the price discovery is done. Right.
Correct, that's true. Okay, so now another problem that arises for holding these many stocks is again, people are not able to prioritize weightages for each stock. So let's see. So if you see anything apart from top five stocks, if you see the average holding, it's less than 2% for them. Even there's some stocks with almost close to 0.28% holdings in them, which is very less for this person. Yeah, his portfolio value is something around 16 lakhs and he's holding something around 50,000 here. So even if Hindalco does well, okay, in the future, it gives 2x, 3x return. Let's say this person, it will be very less when it converts to percentage terms for his portfolio value. So one thing that this person would have to do is that he would have to cut down on the stocks. Okay, you have to trim his portfolio and bring it around to 20 stocks at least.
So what you would like to say in terms of sector diversification? This is all about stock, I guess.
Yeah, this was about stock. This is the very most common mistakes that we find in retail investors do.
Okay.
Okay, then when we come to sector, uh, I think he is fairly segregated between sectors here
Mm-hmm.
because otherwise, what we do see usually with people is they tend to go highly skewed on few sectors. So let's say some people do invest heavily in industrial sectors, so they may invest around 44-45% in industrial sectors alone.
Mm.
Okay, which is too much for them. So that we'll discuss later on when we find faults in people's portfolio. So let's come to another point that we see is market cap split division within their portfolio.
Got it.
Okay, so if you see here the market cap split, he has given around 65% in his large cap, then 16% in his mid cap, and then 19% in his small cap. And his risk profiling, which we did in our forms, it came around to be a high risk person. Okay,
Okay.
who can take high risk. So again, another issue here is he has not optimized his portfolio according to his risk profile. Okay, so when we say he has a high risk, so large caps they are tend to be, we ask people to go on large cap heavy when their risk profile is low. Okay, when
Okay.
you have a high risk profile, he should shift some weightages from large cap to small cap. So again, trimming down stocks, it will help him in this case only that he can trim down large cap stocks and then shift to quality small cap stocks here.
Okay.
Okay, so these were the points. Then apart from that, we can see. So here, if you want to see that is has his portfolio outperformed the benchmark or no, here we can see that this is his portfolio value which has risen, and the blue line is the benchmark value. So he has fairly beaten the benchmark. And the point that we can look at here is how many underperformers is he holding. Okay, so there may be so Aditya, do you know how we can you would you like to inform people on how we identify underperformers?
Yeah, so ideally, any of the stocks that have been performing lesser than the benchmark average throughout their 1 year absolute returns or 3 years absolute returns or the yearly returns that we call it as, and that's how we can call it as them as underperformer with regards to the markets, right?
Yeah, true. And another point that we usually look for is something close to a stock which has fallen more than 20% in a year is
Mm-hmm.
usually something that we can classify as an underperformers too.
Okay.
So here if we see he is one underperformer in his top 10,
Mm-hmm.
then there are a few more underperformers at the bottom if we go down.
Right.
Yeah, again, Tata Motors. So
Mm-hmm.
he's holding on to many stocks right now. And I believe that he has mostly done this through YouTube videos because if we see the name of stocks here, like
Got
Tata
it.
Motors, uh, then Uno Minda, then HAL, Bharti Airtel.
These are most covered or favorite stock of YouTube influencers who make
That's true.
videos every another day.
Yeah, right. See, these are all mostly covered by YouTube influencers. So this is another problem which retail investors faces. Aditya, isn't it? That
So
the
you basically
influencer.
mean to say that research part, which is very crucial while building a portfolio as a portfolio management part, is somewhat missing into this particular portfolio.
Yeah, because see, there will be very few finance influencers who will give good, genuine tips.
Mhm.
Otherwise, usually they pick out hot upcoming stocks and then everybody makes a review on that. And
Got
then
it.
it's usually at the time when the stock is almost at its peak. So very few people get realized gain from this.
Okay.
They until their recommended stocks. Okay, so
That's cool.
that's it for today for equity research. Now let's dive into on how Aditya you do for MF.
Cool.
Let me
So
screen sharing.
yeah, let me share my screen. Just give me a second.
Sure.
Here we go. So ideally, as you have mentioned, as you have shown for the Morningstar ka file, the process remains same for that particular purpose, and only the analysis part that came after the logical analysis, things gets changes. So I hope you can see my screen.
Yeah, I can see your
Great.
screen.
So just I would like to mention few things here. Needless to mention that first of all, we would like to see what all funds that this particular guy is holding. And here we can see the total five funds that he is holding in. So out of
Yeah.
these funds, we can see that this particular first fund is a direct fund. Another discovery fund is particularly a regular fund. So
So
people
what's the
first
difference between these Aditya?
exactly. So this regular fund is what we call it as by being invested or help you to be invested by a distributor. But ideally, which there is very great mis-selling happening into this particular field because whenever client doesn't know the difference between direct fund and regular fund. So regular fund is something when advisor is working by your side, he is helping you, giving you unbiased advice ki what should be ideal fund for you, where should you be invested according to your risk appetite and the market performances, then it makes sense to invest in regular funds. Else, if you are investing on your own, then it doesn't make any sense to invest on the basis of regular funds. It makes sense that you invest in direct funds because usually regular funds comes with the higher expense ratio, and that's how you will hamper on your returns. Because see, if
To
someone is helping you, you don't wanted to pay the fees like something with externally, then it makes sense. But if you are not paying, like you are not getting any kind of service, you are not getting proper risk profiling thing, so it doesn't make any sense to invest in regular funds. And this is the beauty of repeating that you invest in mutual fund with repeating, that you are investing only and only in direct funds. So I'll also tell you the exact difference between what is the investing in direct fund and regular fund going ahead. So let's
sure,
do a
sure,
review part first.
sure,
As
sure.
you can mention that these guys invested only into all ICICI Pruka mutual funds. So this is very clear that either this particular guy is a big fan of ICICI Pru AMC or someone
Agent
must
is there.
have
Some agent is there
correct.
involved.
Some agent is there who has pitched him ki bhai you can invest and it will give you good return, and that's how it is been done. Now the first very big I particularly find here is the asset allocation. So how much amount that he has invested in each fund should be seen in terms of percentage. So the ICICI Prudential Value Discovery Direct Fund, he has just invested 4% of the fund. ICICI Pro Innovation Fund, he has just invested 10%. He himself doesn't know. One only single fund is carrying up to around 15% of asset. So we can simply say कि अगर if we took this two top fund, then mostly the return that he got on his mutual fund portfolio will be mostly driven by these two funds only. So
Yeah,
these
that's
two
true.
funds, if they are there, so out of these two funds, one is regular fund and one is direct fund. So obviously cost is going to be higher for this portfolio as well.
Yeah, that's true, Aditya. So
Then
again,
comes
same psychology as in the stock ones where people are not
correct,
able to
correct,
allocate
correct.
weightage properly.
Absolutely. So in turn, you go and invest in the funds looking at maybe past performance or maybe anything that you do which might not be appropriate one. And then you see the portfolio level, then you come up again with the mistake that you have invested around 70% into large cap, only 8% into mid cap, and only 13% into small cap. So given medium or high risk profile as the client is in, it doesn't make any sense for him to invest like this and get hampered on your return, increasing the cost. Then you
That's true.
also have to see the one and foremost important thing is, let's say you have invested into these five funds, but what all stocks in return these funds are holding. Then I got
Right.
to know with the correlation matrix, seeing that this particular stocks, let's say ICICI Bank, is holded by four different funds which I am invested in out of five funds that totally I am
Oh,
holding.
shit. So there's a lot of overlap here.
Absolutely. If you see Maruti Suzuki, even again that four funds. TVS Motor, again four funds. HDFC Bank, again four funds. So ultimately, if you invest in one fund rather than this four one, you're going to get such allocation itself.
Yeah, so there's a lot of overlap, which
Correct. Lot of
so usually
overlap.
it's not someone who has done research on his own. It's usually by some advice only
Someone
which we can
advisor in
get in.
terms of maybe if you could see this all mutual funds are categorized under thematic itself. So
Right.
energy opportunities itself a thematic. Value
Yeah, yeah.
discovery is something that value we could say innovation, and again this value discovery would be so see the height of mis-selling. This same fund ICICI value discovery is also this guy is invested into direct fund as also into regular fund differently.
Oh, right.
So this is very, and if you see 1 year return, simply here itself. So
Yeah, yeah.
direct fund has given you 7.83% return, And
Right.
value discovery regular fund has given you just 5.74% return. So
Mm,
if you calculate this on higher time frames, then it is a very big dent on your portfolio.
yeah,
So
that's true,
that's
Aditya.
how people have to focus on. So yeah, and
Yeah,
also,
that's what people don't know. They trust their advisors and they don't
yes,
see, they
and
don't
this
get
is
to know that the advisor has this hidden interest in the
exactly. And
recommendations that
at
he
the
gave.
end, this is what happens that we don't want it to be happen with the people. And hence we simply say, by anyone comes to us, we invest directly through direct fund. So miss selling a party khatam.
Yeah, I saw this conversation with some
Hmm.
analyst. I heard that there's a difference between, if we see the expense ratio, the percentage
Hmm.
difference is very minimum when we come
Correct.
to direct or this
So
regular
on
funds.
an average
But
in any fund,
mutual fund, if we see
hmm,
the minimum holding period that people should actually hold mutual fund to realize gain is 5 years at least. They
correct.
should hold the fund, and if we compound the difference, it's huge. It goes into usually lakhs when we
Right.
see this.
So even if you have portfolio worth 1 lakh, you are holding it for 5 years, then there might be a possibility that you could hamper on good chunk of maybe 50, 60,000 of profit within the just fund category of direct fund and regular funds.
Yeah, that's a huge amount when we see it at the end. At the start, it does not seem big, but
Correct.
whenever we shift it towards the end, it looks a bit.
And so with regards to the mutual fund portfolio, as you have mentioned lastly into the stock, that the sectoral diversification is also equally important. Abhi,
Right.
when you are investing in 10 different mutual funds, you don't know what all stocks the fund manager is holding, what is overlapping, what is the percentage. Then it becomes really tedious for the retail individual to figure out ki mera total portfolio, which sector it is invested in. So
Yeah, and
again,
Aditya, again, it's very
hmm,
hard for a retail investor to track also how many holdings is there. He does not
correct.
go into
What
details of
rebalances
what.
are taking place? Nothing can be tracked. So again, so whenever we do portfolio as in terms of your portfolio guidance, then it comes here. We also look at the sectors. Then you can clearly see that consumer cyclical allocation to is 25%, financial services 21%, and technology is approximately 30%. Yeah. So basically, this two, not 30%, this together sensitive sector or to the sectors which are sensitive together forms 30%. And hence, if we could see that more or less, if I take top three sectors such as consumer cyclical, financial service, and industrial, then itself it is forming uh, the allocation of around 50%. So can you
Oh,
imagine the portfolio that you have invested in having 50% allocated only into just three sectors? How come you can
that's
get diversification benefit maximized out of the sector?
correct, correct. And I see they are heavily invested in consumer sector too. That's
Right. So it doesn't mean that any of the one fund that is heavily invested into the consumer cyclical sector. But it might happen that out of these five funds, maybe this fund is having more allocation toward consumer, or maybe this fund is having more allocation towards consumer. And in return on portfolio level, it is happening like this.
yeah, that's true.
So not having 25% allocation is not a wrong thing, but having only a major chunk of the portfolio only into this three sector is something that we feel is concernable. So
Got it.
this is what particular things that we again focus on while doing your portfolio review, that it shouldn't be happen, just to make sure that your portfolio is well aligned with the market conditions, and ideally it should happen in the way to generate greater long-term returns. One thing I would also like to focus here, this person has also invested into energy opportunities fund. It is very difficult to time the business cycle that when energy stocks are going to boom and when energy stocks are going into recession.
Right,
So this
that's true.
person must have been invested somewhere accordingly when maybe NFO has launched or something, someone has guided him to invest in. But after that, he doesn't know that whether this fund is in profit or whether this fund is in loss, how sector is performing, should I invest, should I exit, should I rebalance? No guidance is there.
Yeah, retail investors usually don't get sector specific news too. They have to dig a bit deep inside, and then they will find out what and how the sector is performing. And that too, it's a tedious task to look on how each sector is there,
Absolutely
which
correct. So in
price
that
cycle
case,
it's
if
there.
you come to us in terms of portfolio review, then we would recommend either you invest in some multi-asset fund or you invest in some flexi cap fund, depending on your risk appetite. This is not a advice. This is just for the knowledge purpose. These are the funds where fund manager take the call himself. When he feels that market is heated up, market might fall down, he'll take more positions into large cap and safer sectors like consumer or materials or commodity sector, something like that. And whenever he feels market is at good opportunity value, he'll himself rebalance the portfolio just to you investing through mutual fund to get the benefit and expertise out of that.
That's true,
So again,
Anand.
this thing which is like kind of missing into this particular portfolio by investing randomly into any fund, which we feel should be corrected in terms of investments.
Yeah, so if we now sum up both the reviews,
Hmm.
what I can point out is that firstly, there's a holding issue.
Hmm.
So people tend to hold on too many stocks.
Right.
Okay. Then another issue is people don't know what their risk is, which they can do it easily by any risk profiling exam online,
Hmm.
uh, uh, for free also. And then people don't allocate their portfolio according to their risk.
Correct.
Another issue that they face is people tend to take insights from influencers, and that's usually a wrong idea because sometimes they can enter at the right point, but they don't know when to exit.
Exit, which is a very big
Which is another
role.
important point. People tend to exit when it's in loss. Uh,
Not even exit, but whenever it is a right time that you need to rebalance the portfolio.
yeah, that's
So
true. That's
that
true.
is a very crucial point that you should be able to click in, or not at least at the point, maybe some point later, but not when the price discovery has happened or market has been fallen a lot. That is
Yeah,
too
true.
late then.
Yeah, people tend to not identify underperformance in their portfolio. Another reason for that may be the biases that they hold. So,
Correct.
अगर stock loss में है तो कोई नहीं आगे जाके बढ़ेगा. That's how
करेंगे
people
होल्ड,
think.
क्या ही पैसे का काम
करेंगे,
है।
but they don't understand कि भाई business margin issue face कर
करेक्ट, द
रहा है कि
अपॉर्चुनिटी कॉस्ट इज
management change हो
हाई।
गया है, thesis change हो गया है. They don't tend to dive deep into this. Then
गॉट इट।
again, coming to your MF portfolio, again the same issue. People don't know their risk profile and they allocate like that.
राइट।
A lot of misselling is done in mutual fund because
Mostly,
lack of knowledge.
so in mutual fund, one more thing I would like to highlight as a concluding point. So whenever persons invest into direct funds, he mostly focuses on the previous year ka return, which is not at all a guarantee for future returns.
Again, that's right.
Again, that is a miss point to analyze. Secondly, regular funds mein to no one is the only advisor, distributor is the king. He can sell you anything and you invest blindly because you don't know anything. So we
Right.
just wanted through this portfolio review that these two things should be corrected as the investment into mutual funds by investor themselves.
Yeah, and to guide people also on
Correct.
common mistakes that they do. And if you want, they can learn from us or they can send us their portfolio for review too. So
Correct.
again, if you want to send us your review, portfolio to get reviewed, you can go on to the link in the description also. Either you can hop onto our website to get your
Correct.
portfolio reviewed from us. Okay, Aditya, any other bonus points that you would like to add?
I think I like just to say ki come on the portfolio review. We'll schedule a meet and we'll discuss in details if you have any
Yeah, that's
issues
true.
regarding
That's
your
true.
portfolio.
Yeah.
That is the only bonus what repeating is giving to each and every investor out there in the market.
Yeah, you can get on a call and we can give you more deep insights
Right.
on what's wrong with your portfolio. Right now, it's for a top player of the milk, but yeah, we can go further down also, deep dive into your portfolio and send you a review and our call. So again, this video is purely for educational purpose. This was not some recommendations, buy or
Yeah.
sell
Any
recommendations that
funds,
we are
any
giving.
stocks discussed in
Yeah.
the video is not a recommendation.
Yeah, so right now what we did is it's just to educate investors on common mistakes that they do.
And let our investors and our clients know ki what is the back-end process that happens and how long does it takes. It is not a very easy task as people thinks.
Okay, guys, have a
Cool.
great day. See you on our
Yep.
next video.
Bye bye.
Bye bye.